Hi, everyone, and welcome back. We're talking about one of the most important factors in today's housing market, inflation, and specifically how the latest inflation report is shaking up mortgage rates and what that means for your dream of owning a home, especially here in Los Angeles. The latest inflation data shows that while prices are coming down from their 2022 peaks, they're still higher than the Fed's 2% target. What's that big takeaway for you? Mortgage rates have been dropping, and the average on a 30-year fixed mortgage is at its lowest point in nearly a year. This is a direct response to a cooling job market and growing expectations that the Fed will cut its benchmark interest rate soon. So while the Fed doesn't set mortgage rates directly, its actions and expectations heavily influence the bond market, and that's what lenders use to price their loans. The good news? For the first time in a while, we're seeing some relief for home buyers when it comes to borrowing costs. This is where the rubber meets the road. Let's look at a concrete example to see how this impacts your wallet. Imagine you're eyeing a $1 million home in the Los Angeles area. Let's crunch the numbers for a 30-year fixed mortgage with a 20% down payment. That's $200,000. At a 7.5% interest rate, your monthly principal and interest payment would be roughly $5,594. Now let's say the rate drops to today's average of about 6.35%. That same monthly payment becomes approximately $4,960. That's a difference of over $600 a month. That's a huge impact on your budget and shows just how much a seemingly small change in the interest rate can affect your affordability. Now let's zoom in on our local market. What does this mean for Los Angeles, particularly in areas like Long Beach and the South Bay? According to recent data from Redfin and Zillow, the Los Angeles housing market remains competitive, but it's not as frenzied as it once was. Los Angeles County has seen a slight year-over-year increase in median home prices, but homes are taking longer to sell. In Long Beach, this is a mixed bag. The median sale price has recently dipped, but the market is still considered competitive. Homes are selling after an average of 53 days on the market, which is a significant increase from a year ago. The South Bay, which includes areas like Rancho Palos Verdes, Torrance, and Gardena, is seeing a more positive trend. The median sales price is up year over year, and while homes are taking longer to sell, demand is still strong, with homes receiving multiple offers on average. The key trend we're seeing across the board is a slowdown in the frenetic pace of sales and a slight increase in time on market. This shift, coupled with a recent drop in mortgage rates, is creating a more balanced market. Buyers now have a bit more room to negotiate, and the easing of rates helps with that all-important affordability factor. With mortgage rates at a multi-month low, we can expect to see an increase in buyer activity. The easing of rates makes home ownership more attainable for many. However, this increase in demand could put upward pressure on home prices, especially in desirable areas with low inventory. We're also still seeing a continued lock-in effect where homeowners with low rates are hesitant to sell, keeping inventory constrained. For now, the Los Angeles real estate market, especially in the Long Beach and South Bay areas, is in a fascinating period of adjustment. It's a market that's less about multiple offer bidding wars and more about strategic, informed buying. If you're looking to buy or sell, staying on top of these trends is absolutely crucial. That's it for today's market update. If you have any questions or want to learn more, leave a comment below, and don't forget to like and subscribe for more real estate insights. See you next time.